Good evening, everyone. This is Gambell with SimplerOptions.com, and in tonight's free video, I wanted to have a discussion with you here on a couple of tickers that I'm looking to play, and we're going to get started with Tesla. So, when we look at Tesla, you can see that this is in a clearly defined downtrend, and one of the two markets that I think are most interesting right now are crude oil and Tesla. We always hear all these types of conversations on how are Tesla and crude correlated, and the thing that I want to point out here comes from studies, edit studies, and then we want to start looking at correlations. So as you type the first few letters of that indicator, you can see it shows up here. So let's come in and let's adjust the settings. The first two things that you want to do with this. First off, in my mind, a 10-day correlation is not quite that helpful. If I'm trying to decide if something is truly correlated, I want to have a little bit more of a look-back period than just 10 days. So 30 is usually my go-to. You know, right there around a month. Of course, this is going off actual trading days, but it's just a little bit broader perspective. Okay, then we'll take SPX and remove that symbol, replacing it with USO. So, not a perfect instrument to track it, but fairly close. And then when we hit OK, and OK once again, this is the exact opposite of what you want to see for a market that has any type of true correlation. Because if you come back in and place a zero line here on the correlation indicator itself, and let's edit the properties to put it right at 0, well, what we're looking at are points where it has a good correlation, and then points where it doesn't. A good correlation, and then it doesn't. If this is something you were going to try to base any part of your analysis off of, you'd want to see it maintain most of its time in one part of the range or the other. When it just oscillates back and forth, it's not really something that I'm going to try and base off of any type of correlation. I go through all of this to say that it is not the correlation that has me wanting to set up and be short Tesla and then long XOM. When we look to Tesla, we can see the overall prevailing trend is clearly bearish, and we have a fresh squeeze in play. This is setting this up for me on the short side, and I think going somewhere about 60 days out is the sweet spot to try and catch that full move. If you go to XOM, this is just the inverse of that. And of course I'm not referencing the correlation any longer, but on this particular ticker, we've got a squeeze pattern that I think is getting ready to make a break above this 88.90 range. I don't know if it will be able to come up and make new highs within the time frame that I'm looking for, but we have started picking up a position on this out into February. And then if I wanted to really try and catch a little bit more of that move, stepping out into April makes sense for me. And then I'll look to see if I can get the daily squeeze to fire long, lead into the weekly, and I'm going to try to hold on to XOM a little bit longer than Tesla. But there's one long idea, one short idea, and a good way to compare the two and test whether or not they are correlated. So, I hope that helps. If those of you that are members haven't got a chance to check it out yet, we are doing our Member Appreciation Week this week, so be sure to look for those emails in your inbox. I hope you find them helpful, and we'll see you at the next free video.